email or the notice indicating this was going to be a stand in front of a group and make a presentation versus a roundtable late last night, I created an extensive presentation for you this afternoon. So I wasn't even able to keep it folded, so you'll have to bear with me if I read between some stains here on this napkin. So it's going to be interesting. This will probably pain me. The first few seconds will pain me as I make this comment. But for those of you in the program, what I'm about to talk to is probably the least important part of what you're going to hear today. So how's that for a sales pitch? All the marketing people can just waves of criticism wash over me now. The reason I say that is the finance and accounting realm for a startup, it can certainly break you, but it's not going to make you. The way I view companies we work with that are in startup mode, you're kind of in search of a business model, a business strategy. In that context, worrying about things that we talk about in the accounting world, structuring a chart of accounts, generating statements, things of that nature, not relevant. So what I'm going to focus on today are some of the things that can break you. They tend to be legalistic, tax-driven. Also, some very simplistic things that you want to do, because even though I started this by saying what I'm talking about is not very relevant, if you actually accomplish the goals that John summarized here, because you're in a short accelerator program, it will become very, very relevant for you very quickly. As you scale, the importance of finance and accounting will scale with you. So put that in the proper context. We're going to talk about some things you should be thinking about right now, very minimal, and then most of this will be focused on right before a round, after a round, and then what you might think about as you scale up. Because the whole back office issue, and we're talking about finance and accounting, but you could also think of it as a back office issue in general for any of the non-core services depending on your business. You're going to have the same issue. How do I scale? When do I invest in these types of things? Because the problem is they're cost centers, they're not driving revenue generation for you. But if you don't invest properly in them, you're not going to be able to support and scale those revenue generating activities or monitor them appropriately. So that's the context I'm bringing to this conversation. First comment, identify a point person. Even right now, some of your two-person teams, three-people teams, to the extent you have accounting issues, give that assignment to one person right now. It's probably a one-person job. And that assignment may be as simple as keeping a check register. Most of you are probably no longer using that. I occasionally see people doing that. Everybody's on Mint, Xero, QuickBooks Online, depending on how aggressive you are. There's a lot of great cloud-based systems. But the reason I think that's important is you're assigned all other responsibilities. The accounting finance role, again, not critical right now, but there are some things you want to do. Have that person be assigned to it. Make sure you clarify what that person's roles are. You know, are they going to make the decision about entity formation? That is one of the things that would be critical right now. What structure do I want to be? Am I LLC? Am I C Corp, S Corp? There are tax implications. They are unique to each company. There is no one right answer. Part of it depends on your investment structure, what you're looking for, your own management team. You're going to have options, no options, et cetera, et cetera. So that's one thing you want to take care of, and that is relevant at this point in your development. I recently spent, I guess it was last year, working with a decent-sized startup in San Francisco, funding $50 million through, I think, their C round. They had 4 or 5 people that would bounce the accounting function around, and they were actually generating revenue, and there was a lot of money flushing through this organization. They had receptionists doing this, they had somebody else doing that. We got in there as an unholy mess, and it took about a year to try and get them straight, and that was a waste of time and money for everybody. So if you kind of focus on a point person, expand that roles and continually adjust, but clearly identify what those roles are, what the responsibilities are. As you scale, you'll save yourself some time and money down the road. The other thing I mentioned, follow the rules. Right now, minimal concerns. Things you might think about now, business licenses, as simple as if you're operating a city, make sure you have a business license. Most of you don't have employees. I think one group might have some employees that sound like. Make sure you take care of the payroll tax. Again, can't make you, but it can break you. So we've seen some companies where failure to do some very basic compliance-oriented things such as payroll, sales tax when you get to revenue generation, issues about if you are multi-state, which can happen very quickly even for a very small company. Fines, penalties, interest mounts very quickly, and it can end up taking a very disproportionate chunk of your early stage financing round. So if you're getting $500 in your first round and you're stuck with a $20,000, $50,000, $100,000 penalty down the road, that's a big component. So you don't want to do that. It's very easy to avoid that. Just pay a little bit of attention to it, save a lot of pain down the road. We're in a group of technology companies, use technology. 30 years ago when I started, I came of age My first laptop was a compact about the size of a suitcase. You didn't have online systems. Everything's cloud-based. Strongly encourage you as you progress, when you do set up an accounting system, use a cloud-based system. There's lots of good ones. QuickBooks Online is probably pervasive, Xero is pervasive, etc. It's great to use one that's commonly used unless you have unique industry issues, simply because if it's common, you'll find a lot of service providers, vendors, employees that are familiar with it, so as you scale, it's easy to find people to help you. Page 2. This is probably more applicable now than it will be later on. Don't commingle personal and business. It's hard for you right now, particularly those of you living out of a suitcase maybe and things of that nature. But you'll find that it'll make things much simpler. Even when you graduate from this class, you're starting to look for financing. You want to be able to make the distinction between what your expense components are and what the business expense components are. That will be relevant to you as you try and anticipate run rates. What's my base now that I'm going to extrapolate to develop my burn projections that I'm going to put into some type of summary or presentation to try and generate money and show what my needs are and how long I think it'll take me to get to break even, things of that nature. So try and keep it clean between the two. Right now, budget not too relevant for you. The first time you're going to worry about budget is probably when you start making those pitches, and you're going to be thinking about what my expense structure is like, what my needs are, and that will back into or help partially drive your funding needs and what you're going to need to get. Cash flow will become incredibly relevant once you do get funded. This is probably top 3 problems we see with growth companies once they get funded. There's 2 problems. Number 1, they think, hey, I got X amount of money. I'm going to execute my business plan. There's going to definitely be a round 2, a round 3, etc. Sometimes it doesn't happen. So I think mentally have a contingency plan. Think about your burn rate. What am I going to do if we do not get to my next milestone and therefore I don't get my next round or a follow-on commitment? Do I have a plan B to maybe continue, give myself a little bit more runway? So by nature, you're an entrepreneur. You're very optimistic. I'm encouraging you to once a week, once a month, set aside, have an out-of-body experience, be pessimistic for a while, and say, what will we do if, in fact, we don't hit the milestone or it takes us 3 months longer? I'm getting the middle finger, which I think means 1 minute. Oh, I'm sorry. I misread that. As you age, your vision goes. The other thing I would say is, particularly in early days, don't worry about things like we call GAAP. The accounting standard is not relevant to you. Think about setting up, if you do use a technology platform and accounting system, set up your chart of accounts to be meaningful to you and your business. In other words, be as detailed or not detailed as you want, what we call a chart of accounts, which is what you capture stuff. Finally, particularly early stage, when you get investors, don't allow them to push you into focusing on things like income statements, balance sheet. Focus instead on your top 5 to 10 metrics, KPIs, and when you're meeting with them, focus on that, much less so on what the numbers are. Because again, at early stage, you're a business model looking for validation of your concept. Whether you lost 50,000 or 75 or 25,000, not relevant. What is relevant, depending on your business, is how many customers do we land, how many page views, how many unique visitors, et cetera, et cetera. So focus on those metrics. And I think I hit it spot on. So now I think we've got a couple of questions. You trust the accountant to get the timing right? Not? All right.
I have a buddy that...
Are you able to ask questions? Because technically, I'm not sure you're...
So Ravix Corporation is a consultancy group in the Valley, a friend of mine there. I call it the RISA CFO business. Yeah. So these guys don't have the funding to have a real experienced CFO on the payroll. How would you suggest they get the right advice at the right time and then put the right kind of sort of financial tracking infrastructure that's the right size for their business?
Right. Easy answer is hire my firm. I'm surprised you even had to ask that question. So there are a lot of firms like us that, and we've built a package of services. I'm using this not only to pitch my own firm, but also to give you an example that's out there. So there are firms that have built basically a package of services around the startup community. So for example, with us, we can take a startup, we can set them up in the cloud. And not only things like a basic accounting package, but also payroll, expense system, time reporting, basically everything you need. So for a basic fee, we'll get you set up. Firms like us can then also provide ongoing maintenance of that. We have people we work with as temp CFOs, which is what he's referring to, that we can either bring in as part of a regular service or kind of as an on-demand service. And of course, we integrate it with everything from tax compliance, wealth management, and this is our case, we're a little bit broader probably in our service offerings. As I said, wealth management, tax planning compliance. We also have like an IT staffing group where we'll help people that are having problems. You know, maybe there's a development timeline or there's a special project. We'll bring in IT coders that will staff as well, and I've been cut off. But you consumed 30 seconds with a question, so I should have that added back. He raised his hand. Do I take it?
We gotta take you.
I just want to make the point that I had a startup that basically caved in because we didn't pay our payroll tax.
Yeah, it happens.
Yeah.
Thank you. Thank you for that validation. That's great.
Yeah.
All right, thank you.